funny because it's probably too close to reality. Joining us now is Aneta Markowska. She's chief financial economist at Jefferies. Aneta, do you have your thesaurus, easy for me to say, thesaurus ready? Because any change in any of those languages, and I just posted your last statement on my Twitter account, is going to move markets, I think. What are you expecting?
Well, I would say in the statement, there is really only one word that matters, and that is ongoing, as you mentioned a little while ago. If the Fed wanted to signal some kind of a shift, a softening in the tone, they would change that ongoing to something like more rate hikes will be appropriate or further rate hikes will be appropriate. That would just sound a little more finite and less open-ended. It's not my base case that they change that today. I think it's a little bit too early, but that's certainly something we'll be keeping an eye on. And if they do change that, I think the market would perceive that as a pretty significant shift.
And I'm trying to figure out what the hawkish language might be. Is it things like remain elevated when it comes to inflation? Job market remains strong because bizarrely and a little bit sort of oddly, the Fed actually seems to, they need the job market to cool off.
That's right. I think he will. Well, actually, I think the sort of the main language that I'll be interested in during the press conference is how Powell characterizes the balance of risks. Because up until now, Fed officials have been generally saying that at some point in the future, risks will become more two-sided, meaning they're not two-sided yet. They're still asymmetrically skewed to the upside. So if Powell says something like risks are becoming more two-sided or are more two-sided, again, that would be a very dovish tilt, not my base case. But that would be one way to communicate a shift. It's not my base case because there's just no evidence that the Fed can point to that would give them, any confidence that inflation is on the right path, that the labor market is on the right path. I think he'll talk about that JOLTS data. We're back to 1.9 job openings per unemployed. That's basically just below the cycle highs. There is really no meaningful decline in that trend. And something that Powell really talked about pretty adamantly at the last press conference was this idea that the core inflation, when you look at it on 3, 6, and 12-month averages, it's 0.5 per month, and that still hasn't changed. So, inflation's still very sticky, and there's nothing that they can point to in the labor market that sort of gives them any confidence that those pressures are going to abate. Yeah,
in the last statement, quote, job gains have been robust in recent months. Unemployment rate remain low. Look for a change of the word robust if that moderates again. And then here's the line that sort of sticks out to me and others. The committee is strongly committed to returning inflation to its 2% objective. I mean, if we have a change in language where it's like we would like to see inflation, and that's the kind of stuff we're talking about, right? That would indicate a slightly dovish pivot.
And that is not going to change.
No.
One of the questions that I get from investors very often is, why wouldn't just the Fed accept slightly higher inflation if that avoids a lot of pain? Avoiding pain is not really an option, right? The only question is, do you want to take some pain now or more pain later? That is the trade-off, realistically speaking. And so and hinting in any way that the Fed will be, willing to live with higher inflation, I think potentially unhinges the long end of the Treasury curve. So that doesn't necessarily do us any good either. So I think that phrase sticks, and Powell will be very, very adamant about, his desire to return to that 2% objective.
Well, the language is up on the Twitter accounts. Aneta, we'll let you get ready, get that dictionary, thesaurus, lexicon, whatever it might be.